Sign the minutes of the June meeting. Do you have any apologies?
Oh, just one person, Eddie Reeves.
Sorry?
Eddie Reeves.
Ed Reeves. Do we have any disclosure of interest or party grouping arrangements to disclose? No? Excellent. Item 4. Mr. Bellamy's report from KPMG as to those charged with governance. So,
Thank you, Chair. Just before I start, can I all just make sure you're aware that has just been an additional page to the report in distribution, which I'll cover as I go through the report. It doesn't impact on the overall findings, but it's there for completeness. It's one of the issues I have to report. I'll go through the report page by page. I'll also touch on one or two of the definitions of words used, because I know all can be a sort of technical type subject. So the reason for this report at this particular point in time, at this particular point on the agenda, is so you as the Audit and Governance Committee can be aware of the findings from of our external audit on your statement of accounts before you actually approve the accounts. So in that sense you get assurance from ourselves as an independent, if you like, I suppose, financial auditor on your accounts before you actually approve it. So that's the reason for the report. I'll go through the report page by page now.
and if we take questions on a page-by-page basis?
Okay. I'm starting on page 12 of the pack, which is page 2 of the report, just in terms of the introduction. I've already mentioned that the purpose of the report, but earlier in the year you would have received our audit plan, which dealt, if you look at the little diagram on the left-hand column, which dealt with the first stage of the audit. This report brings to you the findings from the two middle stages of the audit, our assessment of your control environment, which happened earlier in the year, and the bulk of our work, which happens during the summer, our substantive procedures, which really are, once we get your draft set of accounts, statement of accounts, the testing we carry out on those figures in there to assure ourselves that they are fairly stated. It also deals with some of the procedural parts of the final bit, the completion, which is sort of necessary for me to then go on and give my opinion. Section 2, page 13, is just the headlines. I'm going to go pick out two particular bits from this page, but the rest of that will be covered as I go through the report, the rest of the other rules. But the two main ones really, in that our audits complete apart from receiving signed statements, and we propose an unqualified opinion on your statement of accounts, which effectively means that we agree that it presents in true and fair view of your position, and also an unqualified, maybe only the page on page 14, but an unqualified conclusion on your arrangements for securing economy efficiency, the value for money conclusion, which again effectively means that yes, in our view, you've got appropriate arrangements in place to meet the 3 E's. So that's the two key messages. I'm going to move on to section 3 and we'll pick up.
Before you do, just you mentioned audit adjustments on page 13.
Yes.
But then say that they are purely cosmetic. Is that another correct fair word?
Yeah, we did identify 4 adjustments during the audit, which meant the draft accounts were adjusted. We identified something that needed adjusting. And effectively, that's what when I refer to audit adjustments, those are adjustments made during the course of the audit. It happens in most audits, to be honest. There were the four that we identified and have pulled out there. I'm mean, the word cosmetic, is that an appropriate word? What they effectively all were, from, we can go into the detail, but what effectively they all were an amount of expenditure or income which was in the accounts in one of the lines on the face of the income and expenditure account, your core statement, but should have been in another line. So they were in the accounts, but in one line, in a line where they should not have been. So they were amended. So they weren't missing, they were just in the wrong line. Now, you can, I suppose, term that cosmetic because it doesn't alter the bottom line, effectively, but they are in the face of the income expenditure account, and it's correct that they were corrected.
Okay, thank you.
I mean, are there any more questions on the headlines? We will cover this in more detail, but if there are any specific questions on the headlines, I'm happy to take them at this stage. Okay. Moving on to page 15.
Chair, for the sake of clarity, can we make sure we're operating on the same page number, because obviously it's the KPMG page number and the council agenda page number?
We're on the case.
No, pack.
Make sure we're literally on the same page.
Council pack. Page 15 of 148.
Yes,
Yes,
thank you.
Yes.
Absolutely right. So
Yes.
big number.
Well, the first of the more detailed sections actually deals with a couple of the areas we've already mentioned. I already mentioned the proposed opinion, which is unqualified. I've mentioned the 4 adjustments there, which are detailed in, I think, it's appendix. It's one of the appendices. I'm happy to cover those in more detail at that stage, but as has already been said, they were effectively movements between different lines, all in the income expenditure account, and then again in the group accounts, because the two follow through. It's actually a requirement of audit standards that I do mention correcting misstatements where the figures are significant, if you like. So that's why they're there. It's also a requirement that I bring to your attention any uncorrected differences which may have arisen. Now these are effectively differences which haven't been adjusted. So there is one uncorrected difference. Again, that's in Appendix 2. And that relates again to a sort of which line should it be on in the income expenditure account. It relates to housing benefit administration subsidy. Now, effectively, I'm required to bring that to your attention, but I'll say now, so you're aware of it, but I'll say now that if it doesn't get adjusted, because A, it's not a material figure, and B, it is one of these adjustments, it's in one line, it should be in one line or another. It doesn't impact on my opinion. But the requirement is that I bring it to your attention, and also when we get onto the representation letter, that you, as those charged with governance, actually decide whether or not to amend it, and if you don't, which I think is the case in this case, you write to me and tell me why. That's sort of forming requirements of audit standards, and it's there to ensure transparency and that everybody is aware of any corrected differences. Yes, and we also cover the annual governance statement, and I can just confirm there that in our opinion it's not misleading and inconsistent with our knowledge or with the other information that we're aware of from final statements. Over the page, pages 16 and 17, and the additional page, these cover the audit risks. And again, it's a requirement of audit standards that having identified audit risks, and I'll explain that a bit more in a minute, having identified audit risks, that I come back when we've done the audit and tell you what the outcome of those were. Now, we identified 3 audit risks at Daventry, and these are risks to us doing the audit. They're not risks to you as the council in delivering services. They're specific risks that I, as auditor and my team, have to consider when we're looking at the figures, rather than risks to you in delivering services. The 3 that the 3 that we identified are listed there. I mean, in all of them, I'll go through them one by one, it's probably best. The first of them on page 16 is not specific to Daventry. But this year, as you're probably aware, was a year when the local government pension scheme had its triennial evaluation. And what that means in terms of an auditor is that every 3 years, the estimates of your pension liability, which is a significant figure in your accounts, as it is in all local authority accounts, are based on more data than they would have been in the intervening years, which is a process of rolling forward data. So there's new data introduced into that estimate, which is produced by the actuary. So from our perspective, that's a risk for this year. So we have to focus testing differently on those figures for this year, and which we have done, and we are happy with the way those figures and those estimates are presented in your accounts. So that's the first audit risk.
Chair, that's good. How is it that KPMG know about the risk? Do you get briefed by government, etc., what you might look for in particular? So there are 3 identified risk areas to use. Are these where you pay specific attention on it?
Well, they are in this particular year. We don't get specifically briefed by the government or any other body on what the risks are. They're a matter for professional judgment. We have a view as a firm, and I would hazard a guess that the triennial evaluation probably appears in other firms' audits and accounts as well. We keep up to date. We do get briefed by the Audit Commission, and we keep up to date with, if you like, not only issues that may be risks on a wider sense, but we have regular liaison meetings with your officers, as we do with each of our clients, for any specific issues that may be audit risks that emerge at your authority as well. So
there are various ways you're tuned into the risks in particular.
The audit, I mean, all we call audits, external audits, are required to be risk-based, and those are risks that are risks to the auditor to give an opinion, again, rather than, as I said before, risks to the council. So that was obviously one of the risks that was going to be nationwide this particular year, and will probably be again in another 3 years when the next evaluation comes around. It's just a different audit programme that we have to follow. The second one, I'll deal with the second one on page 17, and then I'll go back to the extra page. Of course, another national change this year is a national change in the way non-domestic rates are distributed. Not in the way they're collected, but in the way they're distributed. Because you now can retain an element of that, and within Northamptonshire you have a pooling arrangement. And that wasn't the case in previous years. So the route, if you like, by which the figures in the accounts get into the accounts is different than what it was in previous years. Added to that, whereas in previous years we have been required by CLG to carry out an audit of a return that you and all councils have to send in to CLG, a separate return that details your NMDR collected. We found out in July, August time, that in fact we were not auditors, not just us, but auditors nationally, were not going to be required to do that return, or to carry out a separate audit on that return. And as we usually audited that return at the same time, because it makes sense, as we audit council's accounts, we didn't necessarily have the assurance from auditing that return that we would have had previously. So again, we had to refocus the test we did for the audit to ensure we covered it. We've done that, and we've looked at the way that the figures get into your accounts in NMDR, and again, we are happy with the figures and what I have presented. There is a minor recommendation on procedure, which you'll see the recommendations, but that's not an issue with the figures. Just to point out on that one, you would not have seen that one in the audit plan. It arose later, partially because we only found out about the CLG's wish that we didn't carry out this other work on NMDR in July, but nevertheless we have to report it to you. The third risk is not a national risk. This is Daventry specific, and this is the one on the extra page. And again, we raised this in the audit plan. This was going to be the first year where the council would have to prepare group accounts because of TDECL, the Daventry Estate Company Limited. So that again meant that you would have an extra set of accounts in your statement, group accounts, and also you entered into a quite significant lease arrangement with TDECL in order to transfer in the houses. And that would need to be audited, but that wasn't there in previous years, obviously. And there is always a first year issue with that as well. We've reviewed the lease arrangements and group accounts and related disclosures, and we agree with the treatment as in the accounts that we've got in front of you now. I think as we report elsewhere, there were one or two amendments on the presentation in the CIS, the ones we've mentioned already, and I think also in the group accounts as well. So there were some of these presentation amendments related to that on the CIS, but they've been amended, and we, from our perspective, are happy with the way those group accounts are and the lease arrangements is represented in your accounts. So that deals with the risks. Any questions on the risks? Okay. Accounts production and audit processes, page 18. Overall, the authority has good financial processes and reporting processes in place, and we consider your policies are appropriate as well. We've got the draft accounts by the deadline. Well, just after when they were signed by the deadline, we got them well in time for the audit on the 2nd of July. The quality of the working papers overall, met the standards. Well, one or two, we felt there was some scope for improvement, but generally it met the standard, and officers were very proactive and resolved audit queries quickly. We've raised again a minor recommendation in respect to the working papers. I'll say now it's not a major issue or a big issue. Overall, the standard work papers was good. And prior year recommendations, we made a recommendation last year, if you recall, relating to bank reconciliations, and I'm pleased to report that that's in action. So it's nothing to bring back to you in terms of prior year recommendations. Page 19 just deals with our audit of the control environment. It's important that, as well as the detailed tests, that you have a good control environment from which to derive your figures from the various systems that operate, and then putting them all together through your accounting system into the accounts. I mean, essentially, we think that's effective, and I've no issues to bring to you on that point, on that particular point. Question?
If I may ask a question. Just obviously the crossover of that, of course, is if you're moving things around, obviously audit-wise, from one section to another, does that cross over into the organisational part? So from the point of view of looking at it from a computer, so when you're looking at all your details, does that cross into those sections? So I'll try and clarify that. So obviously if you've got your audit that you're following, and you've got all your details, and then you're looking at organising it and controlling it for future, are you liaising the two parts together?
No, still not quite yet.
I may not have made that.
I think if the question is, yes, we carry out an audit, we go behind the figures, does it cross over into...
As in,
this?
From the organisational point of view, so when you say organisational control...
Oh, right, yes. Yes, I mean...
Because obviously that requires quite a bit of different work, doesn't it?
It does require a lot of different work, and we don't do an in-depth audit of your organisational controls. We rely on work done by Scott as part of internal audit, and your own general arrangements. We could come to a view whether they are sound enough for us to place reliance on them for the production of the statement of accounts. Yes, so we do that, but we don't do the detailed work. We rely on...
Yeah, but you make a recommendation.
Oh, yes,
yes,
we do.
Okay, sorry. Actually, can I ask a question on the back of that? How much time in each audit cycle might you look at the control environment, when looking at documents or interviewing people and so on? Well, how does the audit approach work in terms of evaluating the control environment?
Well, that would depend on what we knew from our, if you like, accumulating knowledge, whether or not we knew if any big financial systems had changed in the year, any specific risks that we gathered on the control side. But essentially, the bulk of the, provided you have a good control environment, the bulk of the work is actually on the accounts and the figures. So we would probably say 2 weeks in the sort of springtime, coming to a view on the control environment, and if that's strong, as it has been in previous years, we wouldn't need to do anything more than that. The bulk of the work would be, once we get the draft accounts, taking the assurance from the first part and then digging behind the specific figures. Okay. Anything else on the control environment? Page 20, this just deals with the procedural issues. A couple of important things though in this section. First of all, I have to, again, by audit standards, I have to issue we have to issue an annual declaration that in our opinion we are independent, sufficiently independent to be objective to carry out your external audit. That's what the first part of that section deals with. The full statement, if you wish to read it, is in one of the appendices. But there's nothing in there that I need to point out to you. The second one, management representations. Before I can go ahead and actually give the opinion on your accounts, standard audit process is that I ask for written representations from management, and this is confirmation that I've been, that all information has been made available to me, etc., etc. And one of the things you will be doing as this committee tonight is approving the draft of the management representation letter, and again, that's a requirement of audit standards. But what I will say at this point in time, to give you some assurance over that, is that it is the standard assurance letter. Auditors can, if they are a little uncertain about figures, ask for additional representation so they can then proceed. But I'm not asking for anything additional. The only thing that it is just the explanation around the uncorrected adjustment, but that's not that unusual. But there's no additional representations or confirmations that I need. So you can take some assurance from that. Section 4, just basically in the diagram, gives you the procedure we follow in terms of the value for money conclusion. But we are quite satisfied that the arrangements in place as assessed against the Audit Commission's criteria are appropriate. So again, it's an unqualified value for money conclusion. We have raised two recommendations there. Both are sort of procedural in nature, so there's nothing around any of the figures, I don't think. The first one, in terms of business rates pooling spreadsheet, again, this is a recommendation we've raised across the pool, and in fact, it was raised, if you like, during the audit, that page 22, that all councils actually confirm they are happy with the figures and distribution from the pool. That has actually happened for 13-14, but the recommendation was made before that. And it's a procedural issue that then I suppose is a full recognition that everybody's happy with the figures that have gone into the pool and then come back out again. The second recommendation is, again, as I said before, is a minor one. It's only just put it as priority 3, and I think I won't go into detail on that, but just on 1 or 2 working cases before we'll scope of improvement. Appendix 2 ticks out the differences. I hope
Page 24. Page 24.
Sorry, page 24. Yes, correct. So that just gives you the detail on the differences. I'm not going to go through the detail unless you specifically want me to. I think the point I would make is, as you can see, by the bottom line, into the bottom line on both tables, in the centre, the adjustment nets out to 1. I think that 1 was a rounding issue. So, although that just proves the point, if you like, although some of the figures are large, they've just been moved from one line to another. So the net effect was a rounding difference of 1. That was all.
Is this in line with what SIPFO would recommend? Because it does seem quite a straightforward way, the way we've been doing it.
Are you referring to any specific?
Yes. Specifically the Housing Benefit Administration grants.
Well, I think that's our interpretation is that I think we've got a difference in how you interpret the SIPA guidance. I think that's essentially what you've
Right.
got. As I said before,
That's
it's not a
okay.
significant issue, but we have a point of view, and I think Audrey will have a point of view as well. But we have to bring that difference in point of view out to you.
Thank you, Chairman. With the operating income, other operating income on the first line, match the right out assets, leased to TDECO, and then you've got those figures in there. Audrey, could you just explain those a little bit for me?
Yeah, I mean, in terms of, it sounds bad in terms of writing out assets, but by leasing the assets to TDECO, the houses, what you have to do with that is, because although the council still owns those assets, because of the length of the lease, they're actually taken off of our balance sheet and shown then on the TDECO. So it's writing out of the assets in the sense that it's changing from us just owning them to represent the lease arrangement. What I would say is, as highlighted really as one of the risks of the group accounts, is that it was a huge learning curve for us as well. Not only setting up the new company and the group accounts, but the leasing arrangements. So we endeavour to get these things right. Hindsight and debate certainly help out.
Well, work well.
Yeah.
It was just how that. I mean, I understand what you've done in the sort of wrong line and everything, but it was just the figure itself, which the amount itself that was why that, how it came to that figure.
You're asking me specifically about why it was that figure opposed to. I mean, obviously in terms
I
of
understand from the paper as to what you've done there, but I just.
that's to do with the valuation of the properties, which the valuations would have been supplied by our own valuers.
Okay, because I've understood from Dina that the valuation was 559 itself, so I didn't understand why you were 139 over. Where that came in.
No, the adjustment is the 5.25.
Yes.
It's just showing that the figure before the adjustment was made was 7.3 million.
Yeah.
We've adjusted for 5.9, which leaves a difference.
Oh, well, yes.
Yeah.
Sorry. No, on me. Thank you, Chair.
Carol? Okay.
I won't touch Appendix 3 because that's a declaration of independence. I'll just conclude by formally thanking Audrey and the team for their cooperation during the audit, which has enabled us to get to this position now. So I'm happy to take any more questions.
Any more questions on this? This has been said. This gives us comfort in order to go forward and seek to approve the accounts. Of course, in our criteria in approving the accounts is satisfying ourselves that they properly reflect the financial position of the authority. So we move on to item 5, the annual statement, and we have Audrey's report on that, and we're going to be asked to resolve the 5 items at the front. Audrey.
Okay, thank you, Chairman. As the CFO, this is the culmination, if you like, of why accountancy exists to a large part. It's the end result of a lot of hard work. I'm sure I don't need to tell you that the complexities that are now in the accounts, again from TDECO, the NNDR pooling arrangements were a particular challenge, and not least of which because a lot of the information that comes out from central government on how to account for these things comes out really late in the day. What I would say is that we've benefited hugely from being in the pool, not just because of the financial arrangement that we've benefited from, but actually working with the other authorities within the pool and accounting for it all. So that was certainly helpful to us. I would be amazed, members, if there is ever an audit report that didn't say there was room for improvement. So I take that as a good result. And obviously, as a team, we always strive to make that improvement. You probably won't be surprised to know that I have a different point of view either with the auditors. We have many debates. But I'll run through the report now because some of the actions all of the actions that Neil has mentioned in his report, we actually respond to in this one, and it explains in particular the difference of opinion that we have. As the chairman says, this isn't about the figures in there or the variances. The figures are what they are, and this is exactly about the processes so that you know that they are stated true and fair. And Scott has a large part to play in that in terms of giving you the assurance throughout the year, not just when we produce these accounts. So just turning over to page 30, really I'm just going to go straight to the two recommendations. As I say, with regards to the business rates pooling spreadsheet, we as CFOs, when we met together about this, I have to sign the NNDR3 claim for this authority to say that the figures are accurate. But that's my opinion of our NNDR3. And although all of the other authorities' NNDR3s, I can't say that theirs are correct. That's for their CFOs. What I can confirm is that the figures provided by their CFOs are the ones that were used in the spreadsheet. As for their accuracy in completing their NNDR3s, that's for each CFO to sign off. Like I say, with the working papers, we're always striving for improvement, whether it was a recommendation there or not, and we work very closely with the auditors. Obviously, with regard to the uncorrected audit difference, what I've presented to members tonight is no different to what I presented to members for the 2012-13 accounts. With regard to it's the funding for Housing Benefit Administration grant. And we kind of took the decision last time. As you know, when funding is cut, which unfortunately comes about regularly, it's much easier to show it as opposed to actually, like it says in the report, it would be a growth bit, if you like, to say that the service was costing more. But in fact, the service isn't costing more, we're just getting less in. So in terms of interpretation and presenting a true picture, I was of the opinion that that was more transparent and followed through with what we did in 12-13. Other than that, really, it was business as usual. I'm delighted with the number of actions actually in the report. They're minimal. Like I say, with regards to the ones that were changed, the cosmetic ones, huge learning curve with that. But any more that come along with group accounts, then gives a bit more time, we'll be experts at it. Just going through the rest of the report, it really just explains the statements in there. And part of what you have to do tonight as well is actually approve the funding for the capital programme. Again, none of this will be a surprise to you as members. We set out our budget as to how we're going to fund our capital programme, and there's really no changes to what's proposed in here to what's been previously agreed that we would budget for, other than obviously it reflects the actuals. As I say in my conclusions, it really doesn't get any easier, and the prospect on the horizon of the timetable being shortened even further from 2017-18 onwards, not only for ourselves to produce it, but of course the auditors to complete their audits as well. And I should imagine there's going to be some challenges there in terms of trying to line resources up at more of a peak during that time. So we're trying very hard to see if we can have a few dry runs in between now and then, and we'll be working very closely with Liam and the team to see where we can make improvements to improve the speed at which we produce these documents.
What's the variation in 2 years' time?
They're knocking a month off of ours, so it'll be the end of May, but they're knocking 2 months off of the audit timetable.
Don't worry.
Practice makes perfect.
Good. Well, so we have to, you have to have accounts by the end of May
Yeah,
for the year ending 5th April.
yeah. Whereas the 31st of March is not the same as the
31st
tax
of
year.
March.
Yeah.
So, and your audit then is
We would have to audit them by the end of July, so we have 2 months, June and July, as opposed to 3 months. Yeah. For some people.
Thank you. Right.
Chair,
Yes.
would you allow
Of
me to
course.
make two just observations rather? As an elected member who is not an accountant, I must admit that Audra's explanation seems to me far more straightforward, transparent and easier to understand. Please forgive me, I'm not an accountant. I really think, as far as we're able, we ought to make the accounts transparent to all elected members. I just like to say that on 3.6. The other on 7.1, this, so have we made any representations to LGA or someone about the changes in timetable? I mean, we accept that we are going to be cutting local government, cutting resources for local government, putting in ever-raising bars. Seems to me that we're getting clobbered both ways. Just an observation.
Yes, I mean, is there any reason put forward by government as to why that time should go down beyond that?
The thing is, information is key, and you'll know that when it actually comes to setting the budgets, we don't get our funding, our final funding, until say January of next year. Now that's all based on information. We all do our accounts and the audit, and it all gets fed into the sausage machine, if you like. So anything that can improve the cycle to bring those things earlier. And in terms of sort of feeding back, there are all sorts of data that not only the deadline for the statement of accounts, but there are all sorts of things in there that feed in. For instance, the NNDR3 deadlines, or the council tax returns, or the RO, the revenue outturns, they all have their deadlines. And what we've said is that we'll meet the deadlines set, but they need to move some of the other deadlines so that the information we use in the accounts is available to us. Because unless they move those, then that time gets squeezed more and more. Will be, in terms of the private sector, they get far longer, I think, to produce their accounts than we do. And if you look at the likes of Old, they're the ones who are patted on the back, because I think they had their accounts within the first 2 weeks of April. But I'm very keen to see the size of their accountancy department, and also the number of assumptions that must be on estimates. So we'll endeavour to do our best, but we'll be working with them. And in fact, I have a meeting with all of the rest of the CFOs from this district tomorrow, working with SIPFA to look at a set of accounts that's a bit more standardised, if you like, to help in terms of production.
I see.
Thank you. With regards to the computer systems, are they all working all correctly now? There's been a few issues with that,
There's, in terms of getting data, our actual main accounting system has always been very good. It's produced. We have issues with our asset system, which is very difficult to get a system that is there suitable for your asset purposes and the accounting side of things, and the system that's there is perfect for the asset side of the management. On the accounting side of it, it leaves a little more to be desired, so we use spreadsheets for that. But short of and to be honest with you, I can't sit here and say that there is a system out there that's better necessarily than the one we've got, because there's always that anomaly between the asset side of it and the accounting side of it, but certainly that's one on our radar to have a look at.
One other question, just sort of generally, on page 33, the business capital spending out there, the budget is 13,259, but actually the outturn was 5,467, and that's been a trend over the last few years. And I wonder why it was set so high and then ends up half what it.
Well, you'll see that there's another column there, because we had the original budget, which would have been set February 2013, and then we had the revised budget, which is the column next to it, the 6.9 million, which would have been explained sort of at the time what the main movements were. I can tell you now, really, in terms of our capital programme, some of the major projects that are on there, we only have to have 1 year's worth of slippage for some of them. For instance, remember we're talking 13, 14, so I think some of those, even from the homes to rent and the crematorium, they're quite large projects, and although it seems like a big figure, we only need 1 or 2 to sort of tip over, the end of March, but it would have been explained at the time of the revised budget. Because the actual outturn obviously is only 1.4 million difference.
And finally, are you going to look at the Tesco way of doing things?
You're not the first member to mention
an example of what audits, I think.
You'll know that my approach is always prudence.
Right. Joe, any comments from your perspective?
No, we said it all in its column.
Yes?
Yeah.
Okay, maybe then return to page 29 and look at the 5 pieces of the advice there. Are we happy to resolve those 5 items? Agreed? Thank you very much. Right, page 127. You have the thrill of seeing my report to council, which I think is the first time it's actually come through this committee. In the past it's gone straight to council. You may have seen it's on the agenda for next Thursday. So I guess the purpose of having this now, I'm required to make an annual report to the council, and this is it. I suppose the purpose now is that if anybody thinks it is facile or too thin or too thick or misses out anything important, do speak up. If you think it needs amendment this year, it can be done. If you think it would look better doing in some other fashion next year, obviously that would be very much taken on board. So this is an opportunity to comment upon it. Yes?
I think I've read it correctly. Are we not expected to report on whether or not we've made any upgrade or changes to the Constitution as part of our annual business?
Part of the Constitution review is part of our job, and I think, and that is in here, the audits, the cycle that I mentioned, including an April annual review of the Constitution.
Yeah.
I've not actually put precisely what we did on each of these heads. I just stated the fact that they did these bits.
So we've done what we should have done, and we haven't necessarily reported here the detail Yeah, that's fair enough.
The detail is of course, in the minutes.
Yes, of course.
And the minutes are available on the website.
Yes,
This
fair
is
enough.
my understanding, and will be corrected by Tony or Scott. My understanding is that this is really highlighting in a couple of pages what we as a committee get up to in the year.
I'm encouraged by the satisfied look on the face of the monitoring officer that we've got.
Oh, yes.
I'm very comfortable sat here, Chair.
I'm glad you're comfortable. That's really...
Chair, can I raise a question, please? I'm not sure what the section is called, but it's second page, about halfway
Second
down.
day, halfway down.
The paragraph, it's basically the table with the numbers.
Yes.
I think I understand it clearly, but I think it might, when it goes to full council, require further explanation, because if you look at the ratio splits, you've got full stroke, substantial, and limited, minimal. I guess, for instance, on the first set, full stroke substantial will be 61, and limited stroke minimal will be 39. So is that the way?
Yeah.
Or if that would just benefit from being in a table or some format that's slightly clear. It feels like there's a mix between too many ratios and too many slashes. Is the point? Yeah.
Yeah.
Chair,
Yeah.
can I
Yeah.
make a suggestion? Maybe you could take the table that's contained by the audit review, which occurs year on year for that particular aspect. Just
Cut and paste it in.
paste that in.
Yeah.
And it makes it a bit more clear in terms of the section.
Yep. Yep, probably a bit late for this year. But I let us just say a word for it on Thursday.
Yes, that would be helpful.
Yeah. Okay. Okay. And we're not asked to do anything about that, just note it.
Yes.
Acronym free this year, Chair.
Sorry?
Acronym free this year.
Acronym. Right, item 7, review the effectiveness of IA. Scott, is this yours or was it? No, Tony, this is yours.
Yes, thank you, Chair. The accounts and audit regs state that the relevant body must conduct a review of effectiveness of its internal audit. And essentially this is what's before you. The information, just running through the information section, the review of effectiveness is looking at work undertaken during 13-14, and this is then set out in the following sections of the report. I think the first point to note is that we're now subject to the public sector internal audit standards, which came into force in April 13, so at the beginning of the financial year 13-14. The standards are intended to promote further improvement in professionalism, quality and effectiveness of internal audit, and they are given the same status as the proper practices in the previous code, and essentially the requirements are very similar. 4.4 notes that the internal audit have to do some external work, arrangements with South Northampton Council and for our payroll services, and also some work for the West Northampton Joint Planning Unit. And I'd say through the review proper, the review concerns the effectiveness of internal audit, and the evidence for that comes from the following sections. So the internal audit charter is in place, and that was presented to and approved by this committee in January 2014. We've conducted a self-assessment, or the internal audit manager has conducted a self-assessment against the standards, and the findings of the assessment were reported to committee in June. An action plan is in place, and progress on the improvement plan is shown in Appendix A. Performance indicators and benchmarking data. Performance indicators are included and summarised at Appendix B. The next point is actually picking up the assurance opinions, which was the item we just discussed in your report, Chairman. showing that we've achieved a 92% in excess of the target for substantial assurance. Over the page into benchmarking, this is an area that we've discussed in the last couple of reviews. The benefit and value of benchmarking is becoming more of an issue, given the sparsity of relevant benchmarking data available. We have nevertheless carried out a benchmarking exercise, and those results are shown in Appendix C. Essentially, this shows that we compare well with numbers of auditors and audited costs. The cost of service in relation to gross turnover continues to be higher in comparison to others, but it's of note BBC has the lowest gross turnover of the benchmarking group. It's not always a case of comparing apples with apples. Myself and the internal audit manager will keep resources and performance under review to ensure an effective service is maintained at the council. Section E, Quality Assurance Customer Satisfaction Survey. All internal audit reports are reviewed as part of that work, and surveys are undertaken of the committee and managers on the effectiveness of the internal audit service. Those results are set out in Appendix D, but it's pleasing to note that all respondents strongly agreed that internal audit was an effective service. External audit opinion. We've heard this evening from Neil on behalf of our external auditors, and we've heard about the reliance they give on the work of internal audits, particularly around the control environment. At the time of presenting or preparing this report, the latest comment we had from the auditors came from the 2013 report, and the commentary there is from that report. But in case anybody missed it earlier this evening, the external auditors were reporting that the authority's organisation control environment is effective overall. And I think I heard Neil say the control environment is strong as he developed the discussion there. The Audit Corporate Governance Committee. The Corporate Governance Committee was established in 1967 and acts as the authority's audit committee. Terms of reference are contained within the Council's constitution. There's an annual working training programme which is kept under review to ensure it remains up to date. The Corporate Governance Committee receives regular reports, and this is again reflected in the Chairman's report that we just looked at. And I will quote the Chairman, if I may. It is of note that the Chairman concludes he is very pleased to be able to report the continuing trend of improving corporate governance in the authority. And I'm very pleased to be able to report that to the committee. And Section H looks at the annual audit plan and the annual audit review. And again, both those documents have been before the committee. So, in conclusion, and a very brief conclusion, the overall conclusion is that the internal audit is effective and provides an effective internal control environment. Happy to take any questions.
Just a couple of points on the appendix. The second, remind me, the second column linked to those two sources. Where do these come from? These questions, these challenges in the second column.
Which appendix are you referring to?
Appendix A.
Appendix A.
Well, yeah.
The second column linked to public sector
Yes.
circumstance.
Yeah.
Yeah, they are the requirements that are within the public sector internal audit standards, and then there's an associated local government application note as well, which goes into further detail for specifics for local authorities.
So these are benchmarks.
So these are benchmarks, and as I've mentioned before, there's a 50-page document of all the aspects which this then action plan comes and draws from those aspects that I need to work on and improve our service. Really.
Yeah. So, for example, the first one there, there's your personal appraisal. Who conducts that?
Under line management, I report to Tony, the resources manager.
Yeah.
But as part of the public sector internal standards, they like to have now some contribution from the chief executive or deputy chief executive to support that appraisal.
Right. So your line manager does the appraisal, having consulted with chief executive, possibly
and
me
also
as well. Yeah.
And also as chair yourself as well as part of that.
Yeah. Just another quickie on 137. Is this a new corporate fraud? The second item, 1I7, right-hand side, progress corporate fraud post. Is this a brand new post?
There's been a lot of deliberation over the single fraud investigation service, which is linked to the universal credit, welfare reform, and moving on our benefit fraud investigation to this new single fraud investigation service. So as part of that, we've had a lot of deliberations between officers on this issue and how best we can retain some resource to push forward and be more proactive on the corporate fraud side. You'll remember earlier on in the year that we introduced the new corporate anti-fraud, corruption, bribery and policies and the response plans and everything that went with that. So we're looking to react to that and provide some resource. So yes, in answer to your question, we are now looking to set up a separate post to provide.
Yes, one would envisage increased risk with the new systems coming in, I suppose. Okay, so members, any other questions? Yes, Joe.
Appendix C, and I think it touches on what we've just said. I remember.
Yeah, what page are we on?
139.
139.
On the benchmarking, to the FT auditors, I know at the end of last year we were talking about how there wasn't enough resources and that something else was being put in place. Looking at these, because here you've got Daventry staying static 2.6 and 2.6, but there's been an increase in actual there and almost a step change if I'm interpreting that right. Yeah. So it's more back to that old resource.
Yeah, I think,
question.
if I may respond to that, yeah, I think it needs to be treated cautiously, and as I explained around the benchmarking information, there's a small pool of authorities who contribute to that. So we need to investigate that a little bit further to fully understand, to draw that conclusion from that.
I wondered if they're expecting something that we're not aware of.
There may be some organisational reviews as part of that. I think it does link back to the previous points, as you mentioned, in respect of corporate fraud. Part of what we're looking to do is to put a corporate fraud resource into the audit team. So it is likely that we'll be reporting a higher resource here next time.
Right, yes.
An observation really. I'm sure that Scott and Tony are both pleased with the apparent results from the survey, customer survey, that says that people are largely either agree or strongly agree. And you find that encouraging, I'm sure. But are you as disappointed as I am at the level of response that you get?
Not a very high turnout, was it?
I think, yes, I'm disappointed. I'm sure Scott is even more disappointed in reflecting the service that he's delivered. But I hesitate to suggest we might assume that those who haven't responded are at least satisfied with what they're getting.
That would be even more obvious if those who had were complaining. So, yeah. Okay.
I and get in touch with some comment when they've got something to moan about.
I'm sure that's right.
Yes, well, yes. Certainly, internal audit is one of our sort of more covert strengths. It's not something that gets a huge amount of publicity.
I can say to you, I actually reading through because I get all the detail that you do, as members don't get, and all the detail that goes through, and I can assure you all that Scott's doing a great job.
Right. May we then return to page 130 and consider and endorse the opinion of the effectiveness of a detailed report. Agreed?
Agreed.
Thank you very much. Item 7, item 8, Ombudsman's Review 142. This is Gemily Finlay. Who's not here.
She's not here, no, it's for me to present,
Right.
Chairman. This is the annual review. We received an annual report from local government ombudsman, and we bring it forward to this committee as part of the government's arrangements. Just before getting into the details of the report, members will recall that they received the corporate complaints report, annual report at their last meeting, and essentially this is linked to that in the complaints which are not dealt with within the corporate system, are they escalated largely through to the local government ombudsman. I say that, and then I'll take you into the report. I think at 3.3, a complainant should give the council concerned the opportunity to deal with a complaint against it first. That isn't always the case, and the ombudsman sometimes will take complaints, record them, and then pass them back to the council, which causes some difficulty in doing the analysis of the figures. And I'll come back to that point a little bit later. We've challenged the ombudsman on that and the position in terms of taking complaints, and the language that we get back is the ombudsman would not normally consider. So the ombudsman is leaving herself some scope to take complaints directly, which doesn't help with our analysis. So and that sort of picked up as we go through the report. Section 4.1, statistical analyses of complaints is shown in the report in the appendix. The Ombudsman has advised that there's a difference in the number of complaints and inquiries received and the numbers of decisions made. That's because they will relate to the year in which complaints are received and also the year in which complaints are resolved, which is not necessarily the same year. In terms of the stats, at 4.2, the Ombudsman has upheld 3 complaints, not upheld 4, provided advice on 2, closed 2, and referred 7 complaints back for local resolution, making a total of 18 complaints for the year. 4.4 really is picking up the point I made earlier that the number of complaints do not necessarily match the number of complaints the council has recorded, because there is no consistent way of getting that information back from the Ombudsman. And also there have been changes in the decision reasons from previous years, which again makes it difficult for us to do make a direct comparison from how complaints have been handled in previous years. Again, we've challenged the Ombudsman on that, and the Ombudsman will tell us what she is doing and doesn't necessarily explain the rationale behind that. I think what we can glean is that in terms of numbers of complaints, I'll jump to 4.9 and come back to the actual complaints in detail. 4.9 looks, we've done a comparison of complaints received by the Ombudsman in year 11, 12, 15 number, 10, 11, 19 number. The figure for 12, 13 is actually shown in paragraph 4.5, where we had 15 complaints, and 13, 14 was 16 complaints. So I think we can see there's a fairly consistent number of complaints. There's no pattern of increase or decrease there. 4.6, 4.7, 4.8 give a bit of detail on the complaints, the 3 complaints that were upheld by the Ombudsman. The first one of those, in second part of paragraph 4.6, related to a case where the Ombudsman found maladministration. This was reported to Council in July 2013. It's included in the Ombudsman's figures for 13-14, but we had the decision and were able to report to Council and report it onto Corporate Governance Committee as extra information when last year's figures were reported. 4.7 picks up the second of the complaints, which was in relation to an enforceable condition for a strict trading consent. The Council was asked to write a formal written apology and remove the enforceable section, and that was duly done. 4.8 was the second complaint within the year, and related to a noise issue that the authority was dealing with. The Council was asked to make an apology, and duly did so. Moving on to section 4.10, and I will admit to using a bit of licence here in section 4.10 in perhaps overstating the position of reported to committee at the last meeting. Committee did agree that the system is effective and that it should continue. I don't think they actually endorsed the policy as is stated there, so apologies for that. However, I think in conclusion, the low number of complaints considered by the Ombudsman and lower number upheld evidences the Council has effective systems in place for complaints handling.
Yeah, I'm sure. Can we just look at the 147, the stats from the Ombudsman? I just wonder whether it's worth pursuing a couple of aspects of this with the Ombudsman. 2 points that occur to me. Firstly, he very unhelpfully has the first list, complaints and inquiries received. And I mean, it's really quite absurd if he's logging inquiries. It doesn't help at all. And the second point is the Vice Chairman pointed out to me earlier, we've got 6 complaints supposedly received by the Ombudsman relating to planning and development. And he's made inquiry of the planning people here and they're not aware of one. It must be possible for the Ombudsman to give us some reference, cross-reference to these. You know, where we've got 3 upheld complaints, we all know what they are. The numbers, in particular, on the top schedule, ending up at 16, they're just numbers to us. He's got files for all those 16. It's not a big job just for him to cross-reference and give us a list of what those 16 comprised. Same with the 18. So we can then cross-reference. We can then reconcile to our own years.
Chairman, I wouldn't disagree with what you're saying, but what I would say is that we have asked the Ombudsman for that information and they've failed to provide it. They provide the information on the standard template and produce the same template for each authority down the line. We've done our best to try and reconcile to complaints as we see them and record them going through our systems. It's not entirely satisfactory, but unfortunately that's the position that...
All right. Okay.
Yeah. It strikes me that perhaps we need to complain about the... Tonight we feel like we're in one of those Hall of Mirrors kind of meetings, you know. It struck me as we were going through, actually, in all seriousness, that it did lack qualitative depth. particularly when it came to, I think your summary share, I mean, for me it feels like a very hollow table. I think it also, it kind of feels almost you could be complacent about such a low number. So I think that there might be some more qualitative depth, like I say. I think I would also like to see, that's the point, the categories that we have where we receive complaints, or to use the chairs, obviously the complaints and inquiries we've received, and have those actually mapped against the outcomes of those particular complaints. That would be far more useful. Like you said about having those reconciled. It does strike me though, I mean, in all seriousness, how does one go about telling the Ombudsman that you're not satisfied with their service? It seems like a one-way street, isn't it?
Well, it's been, yeah, I think the only thing we can do, frankly, is for an chief exec to write, say this has been specifically discussed at this committee, it is frankly unhelpful in helping us to formulate an improvement of our complaint handling processes to have an absence of information.
Absolutely, an absence of qualitative data and real outcomes. They're just a very low spread of little numbers, really.
You probably couldn't.
How do I go? How do I go saying it's been discussed here? And,
there isn't an ombudsman for the ombudsman, so that's the only way we can try and make a difference.
Okay, so going back to 142, we're asked to resolve that we note the annual review. Yep.
Agreed.
Right. Now, do we need to do anything with my signatures, or do we just, we don't need a resolution to sign anything? No. Okay, well, that's the urgent business. That's the meeting. Thank you very much.
Thank you.